Need to start in 3, 2, 1. 3 things. First, setup. Secondly, what the benefits of venture capital and the startup culture that they bring into India. Thirdly, why the counterfactual and opposition side is far worse for workers on the ground. So firstly, the setup. We support the rise of venture capitals within the Indian community. So probably venture capital, both domestic and international, will become really popular. They'll be stepping into the Indian economy and funding a lot of startups and unicorn firms, etc., etc. Secondly, I think because it becomes easier for you as a startup to gain funds from venture capitals, because by definition there will be a rise in venture capitalists, I think startup culture would also become much more prominent and much more popular on our side of the house. The counterfactual that opposition side has to support is I think that first of all, like glorification of startups do exist to some extent on either side of the house, just because there is a trend which I'll be analyzing much deeper later. So, but I think the crucial difference is that the number of venture capitals to fund those kind of startups that are still glorified on their side would be like much smaller, right? But secondly, I would also note that like even in the case that this doesn't happen, right? Like they would have to support an environment where where the majority of the people will be okay, will be like working in like traditional corporate structures, and also be explaining why this is bad later on in my speech. So first, the benefits of like startups and venture capitals, right? Like an important framing to note here is, as I said before, I think startups to some extent get glorified anyways on either side of the house. This is because firstly, there's a media that pushes and exacerbates like miracle success stories of startups, etc., etc. Secondly, I think like it just seems cool for you as an individual to be able to start something with your own hands, and that's like also glorified in like your day-to-day conversations in college, for example. You see your seniors starting a business of their own, you feel inspiration from them. Thirdly, I think there's also prominent figures like within like the tech industries, for example, like Elon Musk, Jack Ma, that are also glorified. They look like role models. You want to do a startup. The glorification exists on either side. The delta is that on our side, there's enough venture capitals to support these startups financially, right? Like, what are the implications here? 4 things. First, I think that because there's much more venture capitalists coming into India on our side and like and competing with one another, trying to fund startups that have the most prospects of success. Startups, from the startups perspective, they also have much more choice in deciding which kind of venture capitalists to turn to. They're just therefore much more competition among the venture capitals, and consequently higher levels of quality in terms of like the amount of funding that you can get, the amount of support that you can get, the kind of safety net that the venture capitalists provide to you, etc. All of these micro things that like accumulate to how well your business can succeed within the market, like increases on our side when there's much more competition. But secondly, I think you're able to spread like more know-how like among the venture capitalists and among the startups on our side of the house, where there is this whole rise in the culture, right? Like note that like there's 2 things to note about venture capitalists here. First, I think they themselves are also oftentimes successful startups themselves, right? And they're trying to give back to the community through their funds. Like this, let's say like the Vision Fund by SoftBank in Japan that led to the rise of Uber, for example. They are able to share their own experiences to many different college students or younger generations who are trying to do a startup themselves. Secondly, they have like many experience with like funding different kinds of startups, seeing the ones that fail, seeing the ones that succeed. So they again know the know-how on the kind of companies or the kind of industries that are most likely to succeed within the status quo. On our side of the house, because there is a rise in venture capitalists, there's more environment provided for them to be able to share their information. For example, through the selection process, you as a startup person are able to like meet up with like prominent entrepreneurs and hear about like the key to success. There's probably more like conferences, etc., where you're able to share knowledge to a lot of people. This just necessarily means that again, there's higher chances of you as succeeding because you know which industries to go to, you know which business model is the best, and you as a venture capitalist and startups know the best way for your business or your or for like whatever know how to like succeed, right? But thirdly, I think that there's just much more safety nets on our side at the point in which even if you do fail as a startup, which is probably the worst case scenario, you again have another venture capitalist to turn to at the point in which there is a rise, and again there's a lot of different options, right? But fourthly, when you think about the economies of scale, it's much better that there's a rise in venture capitalists and startups on our side of the house, because they're able to gather in like certain tech hubs or large cities in India. I think a good example of this is Bangalore. You're able to use shared offices, for example. You're able to develop small platforms to get cloud funding, to share information. There's just much more. It just becomes much more cost efficient for you as a venture capitalist firm or you as a startup to do it efficiently at the point in which you're all clustered together in one space and you can share a lot of things as like the startup or venture capitalist community, right? Before I get into the counterfactual and opposition side, I'll take a POI from closing, if any.
India has the highest population of college going students. We are literally 1 billion strong. That means no matter how many VCs you add, we are always going to see a significant asymmetry in their numbers. So the negotiating chip is always with these VCs.
I think that asymmetry that you just pointed out, it's much worse on your side of the house. I'm going to explain why. So look, as I said, the glorification of startups themselves will remain anyways, even on your side. The delta is that on your side, because there's much less venture capitalists to fund them, there's, again, a more exacerbated power asymmetry. There's much less knowledge. There's much less like venture capitalist choices that you could turn to as a startup. So I think the kind of scandals and failures that were pointed out within the info side are going to happen at a much higher rate on your side, at the point where startups still exist as an industry because of the whole glorification, but the number of venture capitalists significantly decreases. So there's much lower quality competition, et cetera. This is important because any kind of harm of the venture capitalist or startup culture that opposition side proposes is likely to be amplified at the point in which the quality is low on their side of the house, right? Why is all of this important? Two things. First, the industries that startups or newer industries turn to are oftentimes industries like tech or like space development that is relatively new. This means that you even as a developing country or even as like a significantly underfunded industry can have a first-hand advantage, and you can also compete globally. So on a macro level, I think India is able to have much more economic growth or wealth trickling down to people on the ground because it's much more likely for you to be able to compete in newer industries where you have a relatively first-hand advantage. But on a micro level, again, there's also more chances for succeeding. That means there's more money flowing down again to the workers, the entrepreneurs on the ground. But secondly, you're able to cater to much more niche consumer bases to differentiate yourselves with larger or more prominent industries. This just means that there's going to be more diverse services for the minorities who are not represented within the current market or the current economy in India. For example, you're able to have more femtech, that is technology specifically catering to needs of women, for example. Maybe you're able to have food service that specifically caters to the needs of religious minorities, et cetera, right? But even in the case that startups completely disappear within opposition paradigm, I think the traditional power structures of the current corporate hierarchy that they have to support is much worse, at the point in which you as a worker have much less power within the corporate structure to reflect your own needs. And I think that minorities are harmed at a much higher probability on their side. For all these reasons, we're very proud to propose.
I thank the Prime Minister for the fine speech. I would now like to invite the Leader of Opposition to open the case from side of him.
Hello? Am I audible?
Yes, you are.
Can I be heard?
I muted myself, so.
Oh, it's also muted. I also muted myself. Let me unmute myself. How do I unmute myself? I'm so sorry. I can't. How do I unmute myself? Am I muted? Hello? Can I be heard?
Yes, you're audible.
Wait. Can I get some verification that can be heard? Sorry, I don't really use Google Meets. I don't know how this works. Wait, am I muted? Is my audio on? Oh gosh. Sheesh. Oh, I'm audible and visible. Okay, cool. Sorry about that. I don't really know how to use Google Meets. But yeah, I'll be starting my speech soon. Can I get POIs in chat, please? Okay, so the OG case to me is saying that venture capital is good and then saying that if the rise of venture capital happens, then more good things will happen. Unfortunately, it's not as simple as that. What does the rise of VCs actually look like? It means that more businesses are relying on venture capital to finance growth rather than traditional financing methods. It means that financial institutions have venture capital as part of their portfolio, and because they see the allure of venture capital in terms of getting back more profits. And thirdly, there is a general sentiment that VC funding is a good investment and that it is stable. There is a fanaticism around startups and disruption, and it romanticizes things like Silicon Valley and all of these entrepreneurs. What is the implication of all of this? The first is that more money is being poured into the venture capital market, means more money from investors, from financial institutions going into startups. And the second is that more people are beginning to make startups to try to attract venture capital because of this fanaticism. Why is this a bad thing? The first, in general, more capital is being allocated to venture capital, which is specifically the tech industry. Money is finite, so money from financial institutions is moving away from things like the stock market, bond-like securities, or government bonds, because this general fanaticism tells investors and tells financial institutions that the startups are the future, so we should move more of our capital there. So financial institutions move more of their portfolio to these venture capital firms, away from things like stock markets that benefit existing businesses, away from things like government bonds that benefit infrastructural projects, away from things like bond-like securities that benefit utilities, things like electricity and water. So money is a zero-sum game. More money is going to VCs because of the rise of VC funding. These things benefit more groups of people, and it benefits a more diverse groups of people, rather than venture capital, which only benefits a small section of society who are privileged enough to build a startup or to have a university education in order to endeavor in technology. Money pours into this because of the inflated optimism surrounding venture capital. This also means, because there's more capital, that credit comes much cheaper. It becomes more accessible, which means any random startup can access VC funding, which means that risk is increased. A simple statistic here is that 75% of all businesses fail within the first 3 years. This means that 75% of the startups that venture capital firms are pouring millions of dollars into are statistically likely to fail. Why is this dangerous? The first, a huge surge in startup means that VC firms cannot differentiate between businesses with actual potential and those that are doomed to fail. The opening government says that it's more good that people are starting their own businesses. However, this crowds out the actual entrepreneurs with bright ideas, because the entire VC firm is diluted by all of these random people trying to be the next Elon Musk or trying to be the next Jeff Bezos. Second, the opposite problem happens where there are so many VC firms that exist that startups are unable to choose correctly. There is a choice paralysis that happens here, which means that they are more likely to get a bad deal. They are more likely to exchange huge amounts of equity for very little funding or no guidance, because they're unable to choose properly from all the millions of VCs that might lie to them. The next thing they say is that it's good because there'll be competition between the VC firms. The point I want to make here is that being a venture capital firm is extremely hard. You are intervening in the early stages of a business development, which is the most volatile. There is no market share, there is no consumer base, and is most statistically likely to fail. Not any random financial institution can have a venture capital portfolio. They need to be specialized in the early growth stages of a business. They are unlikely to be successful in helping business develop in a world where they're only having a venture capital portfolio because of the inflated optimism. But thirdly and generally, startups are hugely risky. Their valuation is not based on current earnings or current profits or current market share, but a general optimism, speculation that they might be profitable in the future, which is extremely hard to predict. This is infinitely harder to predict with the rise of VC funding, where people are being blindly optimistic about the potential of these startups. More money pouring in means more capital being allocated to startups that are likely to fail. First harm. This is dangerous if the venture capital is using funding that comes from pension funds. Look at Melvin Capital that uses people's pension funds, their retirement funds, to invest and speculate. Financial institutions will pour this part of their portfolio into these startups that might fail because of all the structural reasons I provided earlier. Second reason, there is very little previous earnings or financial statements that can allow us to properly evaluate these startups. Their billion-dollar valuation isn't based on real value or core value, it's based on the hype surrounding them. This is harmful because the high valuation gives them easy access to credit and bank loans. The reason why this private firm has a billion-dollar valuation isn't because it has a good business model or isn't because it has a good business proposal, but because VC firms are able to artificially inflate the value of the stock because they're pouring in a lot of money into it. This means that the billion-dollar valuation might actually mean that these companies are actually going to be very unsuccessful and do not actually have a good business idea. But unfortunately, the high billion-dollar valuation is what banks look at. So these companies with no real business proposals or no real good ideas are able to get access to things like cheap credit and cheap bank loans, which inevitably cause a ripple effect in the market when they fail, which causes a debt contagion when one default leads to another because this company cannot pay its loans that it managed to get because of the billion-dollar valuation. A good example of this is WeWork, where the multi-billion-dollar valuation made people start thinking that we should give a lot of loans to WeWork, but unfortunately, they failed out in the future and they became over leveraged because they took on so many bank loans. What will VCs do on their side? The first, they might pressure them to remain private so that companies can take most of the value, which means that most of the retained earnings from the companies goes to the owners and other people cannot invest. The second, VCs pressure them to do their IPO prematurely, which means they sell overvaluated stock and earn millions of dollars from it. What is the comparative that we defend on the side of but before that, I'll take a POI from closing, please.
Yeah, your characterization of financial institution is wrong because bonds and shares will obviously exist even if you're trying to say that the money is going on.
A financial institution has a fixed amount of money, $100. They either choose to put their $100 into government bonds or they choose to put their $100 into VCs. The rise of VCs means that they're more likely to put it into VC funding, which we explain is statistically likely to fail. What is the comparative? The first, we specifically oppose the rise of VCs, which means that there will still be VCs on the outside of the house. It's just that they're specialized and selective. The second, less venture capital marketing means that when people start with venture capital funding means that when businesses inevitably fail, the effect on the economy is less because less capital is in the market. How will companies get their financing? Look, startups will still exist, but they'll be funded through other ways. Things like debt financing through bank loans, things like equity financing from going public, things like using retained earnings from their profit. There are a million other financing options that companies can use that doesn't require venture capital that immediately pours $1 billion into a company that might not be ready to handle that much capital yet. The trade-off here is that yes, development might be slower, but they needed to prove why it, like quick development, where a business valuation can go up to $1 billion overnight, is necessarily a good thing. We told you that this introduces risk and volatility into a market when we have a company that might not even be successful in the future, getting $1 billion investment and taking a bunch of credit loans from banks because people are so hyped up over these companies, and then they're over leveraged and they fail. For all those reasons, very proud to oppose.
I thank the yellow for the fine speech. Before that, can the timer be reached and again? Thank you so much. I invite the DPM to continue the case from side comment.
Okay, I hope I'm audible.
Yes, you are.
Thank you. Okay, I prefer POIs vocally, please, because if I might not realize if it's in the chat. Okay, so my time will start in 3, 2, 1. So 4 things I'm going to do in my speech. First, provide a couple of responses. Secondly, I'll talk about like why why like the sole existence of these only pre-existing big companies is bad. And thirdly, about like how the domestic market is going to benefit through in our world exclusively. And in my remaining time, if I do have time, I will talk about working conditions. But okay, firstly, beginning with a couple of responses. 2 things to say. One, the leader of opposition had a couple of concerns regarding like more like failed startups are going to exist, or like overhype of like startups value. It means that like billions and billions of dollars are going to be wasted. Note that this is better solved on our side if you buy Prime Minister mechanism, because one, there's more information on our side, because there is more, because like, the existence of more startups means that there's more and more case studies and more analysis of like stock of experience about like what is likely to fail and what is not likely to fail. That means that people have more information before they want to opt into decide to start a startup, etc. So which means that people have more information before they make a choice. People have more autonomy on our side. But secondly, like because there is more VC competition, like these know-hows about like case studies and etc. Case studies or like better business models, better working condition models. All of these business models are going to exist more on our side because VCs compete with each other to have better services. A second response I want to talk about is the concern that they had about like trade-off with bonds or like trade-off with pre-existing businesses. Well, one, like they never explain why these bonds are good in the first place. As long as these bonds continue to be profitable, they're probably also going to exist on our side. We don't see the exclusive benefit of how buying a bond bond is going to trickle down to the minorities or like the people on the ground, whereas comparatively, as we will show you later in my speech, these the benefits of these startups will trickle down to the bottom. And secondly, they talk about there should be a variety of ways to fund these startups. Like that is exactly what's going to happen on our side, right? They cannot claim that as an exclusive benefit. Like the ways of funding these startups is much more likely to happen on our side when there is more startups, there is more know-how, more stock of case studies. That's why we say that all of the exclusive benefits that they claim actually do not exist. So firstly starting with why why the counterfactual, in which only these big these big corporations are going to like dominate, is bad, and the situation on our side, which is that both big corporations and startups exist, like augments both the agency of both workers and consumers, and why that's better. I want to talk about this from two aspects. Firstly, from the service wise, right? Three things to say. One, we say that big corporations generally are more likely to be minority unfriendly because they have disproportionate incentive to limit their customer target to the majority, because that is simply cost benefit analysis wise the most efficient business strategy. But secondly, it's likely to be ran by these majority, right? These big corporations are likely to be historical business powers. It's likely to be dominated by majority ethnicity, or dominated by men, or historically powerful like families, like business families, etc. So we say that these service they're unlikely to have they have empathy limits to these minority people on the ground, which means that they're unlikely to produce these minority friendly services. And so thirdly, they already have established dominant share in the domestic market, right? That means that they have less incentive to improve their products, or to diversify their products, to tap into these minority niche concerns, or to lower the prices.
PYO.
That's why we say these big corporations are unfriendly not only to minorities but also to the economically disenfranchised. Not now. Okay. So the second aspect is about labor condition wise, right? Four things to say. One, discrimination in the workplace is much more likely to exist in these big corporations, because comparatively on VCs there is less class barriers, less academic credentialism, or less male dominance, because people can choose who to work with and who not to. But secondly, workers have have less clout to influence the board of members of these big huge corporations, because simply these people are too powerful. They have too many connections with too many rich people or the media, etc. Thirdly, it's difficult for media to criticize the working conditions of these big companies, because the media themselves also have ties with these powerful people, with they were former classmates, or they are sponsorship, they're sponsoring their media platform, etc. But fourthly, the bureaucratic process of filing labor complaints and it being discussed in councils and getting accepted, etc., is just going to take eternally long in the context of these Indian massive corporations, right? That is less likely to happen when these VCs when these startups have much more small this sort of nuclear structure in which conflicts can be resolved in much more easier and more transparent ways. Okay, but before moving on to my second part, I'll take the POI.
We told you that companies can use debt and equity financing so they can still exist and grow. What is unique about VC funding other than overvaluing companies that might not actually have good ideas?
Because the way of the variety of funding, I just told you about this in my first part of my speech. If you've listened, the diversification of these funding is more likely to happen on our side rather than yours, and that which means that the pie of the resources that we can invest in the entire economy, in the ecosystem, is going to increase more on our side, because more diverse models are going to exist. Okay, so thirdly, about the trickle down to domestic market, we say these benefits, because OO says that these startups are going to tap into privileged people's concerns. We say this is simply no, because we say that they have more because these startups have more chance of winning in domestic markets. They have a selfish incentive to do so. Why? For three reasons. A, domestic markets where there are less rivals, it is simply better condition. If you go international, there's probably MIT people. But B, there are more connections with business owners or investors, so it's easier to make business partners or launch collaborative enterprises, or simply they're more likely to get investment to even start your business in the first place. So, but C, there are more know-how about tapping into local needs or local necessities that foreign companies have no way of knowing. So that's why we say that these domestic concerns are likely to be addressed by these startups because by these startups anyways. And so all in all, we say that like these working conditions wise or like service wise or everything wise, like these startups are going to be much better on our side because there is more stock of information, there's more know-how, the existence of like a small number of of startups is much worse because there's going to be a monopoly of like VCs who have absolutely no incentive to improve their businesses a bit, and that's at the point where like exploitation of like stakes is likely to happen. That is because it's better that VCs have incentive to improve. We're very happy to propose.
I thank the DPM for the fine speech. I would now like to invite the Q&A.
Sorry, it's also my first time using Google Meet in a very long time, so please give me like a few seconds to organize my screen.
Sure, no worries.
Okay. I will take my POIs in the chat. Starting my speech in 3, 2, 1. OG had a vision to transform the vibrant startup economy in India into one that benefits workers and one that can even gain global recognition. The problem is that A, they got the comparatives in the debate all wrong, and second, they never once explained why the opportunity cost is justified in that the limited amount of capital that exists should be transferred into the hands of venture capitalists with far more perverse incentives as opposed to leaving it in the hands of debt financiers as well as in the government. So I'm going to do two main things in my speech. Firstly, I'm going to prove to you how we achieve these two aims better than inside government themselves. And second of all, why O is the only one so far that has gotten the actual context of this debate, right? So first, let's talk about the startups, which seem to be like the crux of the opening clash. So we agree that startups are the future of many economies, and we are proud to see the rise of entrepreneurship in India because it's empowering to individuals who can break free from the traditional corporate structures and their opaque exploitative practices. But there are several problems in the mechanism, or should I say the missing mechanism inside government's case. First of all, startups that should be obtaining loans for their good novel ideas. And by startups here, I don't refer to the startups that are getting venture capital funds because venture capital firms tend to fund firms that have existed for at least like 3 years or more. We're talking about nascent startups here. These startups with good novel ideas are not getting the funds that they need because any capital that exists in financial institutions goes into venture capital or their side of the house, which means that more capital in financial institutions will go into the investment in private firms, venture capital firms, instead of going directly to the startups themselves or to bursaries or to other foundations that seek to help the startup survive past the 3-year mark of the business life cycle. If competition is something that OG wants to achieve, I'm afraid they do not actually achieve that. As Allo has already explained, startups are far more likely to fail, and it is especially so now because less money is now allocated to startups since they are all going to venture capital firms or going into like venture capital within like the firms, the banks themselves, sorry. So that means that when startups are more likely to fail on their side of the house, this means that people now have no choice but to go and work regular white-collar jobs because they no longer have much assets to their name in order to start a new business and try entrepreneurship again. So the worst-case scenario that government does not want to see happening is actually more likely to manifest on their side of the house where poorer individuals with no more assets left to their name and have no choice but to go and work for the big companies that they dislike. What is the worst-case scenario in opposition? Probably the same thing will happen. The startups that are doomed to fail are going to fail. It's the same likely scenario as inside government. But what's the best case in opposition then? We think the startups are more likely to succeed because there's far more avenues, far more capital for funding to be achieved by the small startups on our side of the house. This looks like more space for the microfinance industry, for example, to grow and to benefit women and minorities who embark on startups. This may be contrasted and directly deals with the DPM argument by talking in terms of the continued empowerment empowerment of venture capitalist firms on their side of the house, which are much less likely compared to financial institutions in the government to see businesses started by women or by minorities as worth investing in. And this is the exact reason why most of the private unicorns that we see in India today, that VCs invest in the long run, are industries that are continuously dominated by men. So does government achieve an empowerment for women and for minorities? Chances are no. Is it likely that this will happen on our side? It's not clear whether it is certain, but it's definitely more likely than inside government because there's more capital available for these startups by women and by minorities to access debt financing, equity, and other alternative forms of loans, given there's more capital on our side of the house. Second problem with government's mechanism here is that there tends to be a huge overvaluation of these private unicorns because most of the value that you see, like 41 billion, for example, in the info slide, tends to come from venture capital funding. What does this mean? Two things. Firstly, a huge opportunity cost is created in that other more deserving prospective venture capital recipients or other small nascent enterprises could have gotten these loans. But second of all, and more importantly, if the private unicorns fail eventually and they cannot pay back their loans, which we suggest is likely to happen given how severely overvaluated these companies are, then this creates a huge ripple effect in the economy where all financial institutions will start going into debt and panicking. This is especially likely to happen given that most commercial banks are interconnected, and insofar as government and both agree that taking loans is now becoming more of a norm given that startup culture is more popular in India nowadays. This means that a lot of banks now normalize the practice of taking loans from other banks in order to finance like the loans to other like venture capitals on their side of the house. So what this means is the moment a single private unicorn inside government fails, this creates a huge ripple effect whereby all commercial banks struggle to pay back other banks, and therefore this is likely to lead to a huge economic downfall for India. We don't think that this risk is worth taking on our side of the house. But third of all, we think that bonds are much better compared to venture capital as in terms of its reliability and a source of funding, because bonds are ultimately the means for the government to finance infrastructural projects. So it's more likely than not that the government would want to yield net social welfare benefits, since the government is relatively more incentivized to benefit people compared to venture capital firms, which are solely profit oriented. For those reasons, we think it's far more empowering on our side, and it's much less likely that exploitation is going to happen. Second thing in this speech, who gets more funding for small, medium enterprises? This by DPM says diversification of funding occurs when people can get more funding. But that's not how financing and how loans work, right? We're talking about the allocation of limited capital here. So first of all, we think that companies can access bank loans equally easily on our side, right? We think it's less likely to happen inside government when the decision-making calculus for who gets loans is trust to venture capitals as opposed to banks. So their side actually empowers venture capitals without justifying why such empowerment is good, nor why the decision-making calculus of these profit-oriented capitalists is likely to be in the interest of society, which leads me very nicely to my extension on how side government perpetuates the exploitative practices in private unicorns. Recognize that a lot of private unicorns are different from public companies in the sense that their shares are not publicly sold, which means that the public has less of a say or less ability to come up with an accountability mechanism to call out any exploitative practices that occur beneath like the opaque curtains of the private firm. So this is why venture capitalists tend to invest heavily in privatized firms in the long run, right? And we think it's problematic because the market for startups in India is very competitive. So cost benefit analysis wise, it's more profitable for venture capitalists to get a main shareholder stake in a private company than in the comparative of funneling a large amount of money to make sure that many different companies will grow despite their lack of a majority share in those places. Therefore, venture capitalists are incentivized to keep the firms private and grow them into unicorns so that their stake in the company will not be diluted when the public shareholder buys shares. Second, they will be able to build long-term rapport and trust with the directors, which allows for them to control the way in which the startup develops. That is how it becomes profitable for the purposes of venture capitalists, but that is how mass layoffs, things like in scandals, go completely unaccounted for. That is when exploitative practices are not called out properly. That is when the workers ultimately suffer. Because we build a better India and a better economy, you have to side with opening opposition. Thank you.
I thank DLO for the fine speech. I would now like to invite the members of CAP to open the closing half of the debate.
Hey, can you hear me?
Yep, perfectly.
Cool. PY is in chat. 1 second. Cool. Beginning in 3, 2, 1, go. One thing I want to flag with regards to opening opposition, and then a huge case about why startups likely exist on both sides and why uniquely these venture capitalists within India are likely to make these startups better off on our side of the house. The one thing I want to note on opening opposition is that in LO, they talk about how you force these companies to prematurely do IPOs. And then in DLO, in response to the opening government case, a lot of their responses were hinged on the fact that these venture capitalists, or like their extension basically, was that venture capitalists want to keep these companies private and therefore like fuck them over. Which one actually is it? If they're forced to do IPOs, surely they're just intuitively public. But note that big thing then, startups are likely to still emerge. Why? One, because the general population of India is massive, and you have a plurality of markets within the Indian economy. On a macro level, you have many different states that exist within the particular country of India, but also on a smaller level, you have many different industries that exist within a lot of these geographical sectors. Two, you have the saturation of technical industries within the Indian economy, which means that at the point at which the computer science industry is fully taken, these big corporates have literally hired every single individual that you have, and you don't get these jobs, you probably have more of an incentive to pivot towards entrepreneurial things in the first place. But I think thirdly, there's just generally a rise of campus-based entrepreneurial modules in large technical institutes. For example, IITs have begun to instill lots of entrepreneurial programs on campus. What that means then is that startups are likely to emerge on both sides of the house. And I think even without this motion, startups are likely to exist. What side leaves these startups better off? And I think that debate is where the debate is. How do these VCs invest in startups then? Let's characterize them a bit. Because I think that the rise of VCs necessarily means the rise of VC activity as a whole, and not the rise in the individual number of VC firms that actually exist. The reason for this is that there are a few VCs that exist in the world that hold large amounts of capital. For example, Andreessen Horowitz and Sequoia Capital. The reason for this is that you have high net worth individuals that invest in them, and they then in turn invest these high net worth individuals' money into companies. They then make returns on these investments and pay their secondary investors back in the first place. The intuitive reason for there only being a few number of VCs in the world is that there is only a small number of high net worth individuals who have the disposable capital that is required. Then, as a result of this, VCs often work as pseudo conglomerates to deliver these funding series together. That is to say that companies raise capitals in multiple phases. You have series A, B, and C. The reason for this is that future funding is often contingent on quantitative metrics like revenue and returns. This is the true picture on the ground, and opening government's competition stuff is merely asserted. You probably don't have a rise in the absolute number of VCs that exist, just the rise in the investment of VCs. But I think the second reason is that this debate is about venture capitalist firms and not individual venture capitalists. But note then that as a result of the pseudo-conglomeration of these VCs, this is inherently coercive to these companies seeking this funding in the first instance. Crucially, this problem becomes worse in markets where venture capital firm investment is not established, like India pre-2018. What changes then? I think one, leverage shifts on a comparative level. What the leverage shift crucially is not that there are more number of VCs, but the fact that there is increased awareness of the activity of VCs. Opening government merely asserts that you have more information. What is the reason for this? One, I think regulatory laws in India force a lot of companies to make information public. This as a result of stuff like all of the scams that have existed. For example, the 2G scam, which has placed an increased burden on the government to regulate these companies in the first place. But note secondly, unicorns often reach their valuations through the carrying out of IPOs. I think LO also implicitly concedes this. So at the point at which you carry out this IPO, you have to be publicly listed, and therefore that information exists in the public domain. This is the mechanism for all of opening government stuff around impacts, all of opening government stuff on information, and the fact that all of their stuff on competition is also contingent on this information. We've provided the mech, we win over them. But what ops world looks like is that you still have startups where you have far less funding for the startups. Where do they get their funding in ops world? I think first they're forced to pivot towards government bond securities, which are extremely limited in the first place. The reason for this is that a lot of these government bond securities are often used for other purposes like macro level investment on terms of the government, and are often not trickled down to these startup companies in the first place. But secondly, even if they're not limited, these institutions operate on lending bases. Note crucially in the status quo, stocks are unable to be used as collateral because these stocks don't have any value in the first place because these are startup companies. What this then means is that one, you are forced to give up higher levels of collateral on their side of the house, and two, you have to pay back a loan in the first place. So even if collateral isn't high, you still have to pay back some form of credit line that is given to you. Note crucially, because I think open opposition assert that venture capitalism is just loans that are being given, that a large majority of venture capital funding is not a credit line and is funding that is exchanged that is funding that is given as a grant to the company in exchange for stocks. This is literally in the info slide. They ignore that. They think it's about loans. The third thing, loans are bad on their side of the house. You just have to pay a loan. The third thing is that the alternative mechanisms that opening opposition talk about ignore the current Indian climate. I think one, because you have macro-facing economic plans that the very government investment, one, because of the intuitive socialist-leaning economy that India has always operated on, but two, the strongman nationalist regime, which means that you like the Modi government wants to focus on macroeconomic policy and boost India's perspective in the global sphere. Why do you succeed on a comparative level? What I just outlined to you does a few things. I think one, going forward, you as a startup have to expend capital as if you have to pay this loan back that is leveraged against either your shares, or even worse, material resources that the company has. What this then means is that that company is unable to grow in the first place. But I think secondly, the amount of funding that you get is largely constrained because of all of the reasons that we told you. So even if you keep all of your shares, the value of your shares will never go up in any way. You're more perceptive to failure on their side of the house. What do these VCs uniquely do? Because I think everyone ignored that you now have 41 $1 billion valuation companies. Know that opening opposition's overvaluation claims also unlikely to have much delta, given VCs have a stake within these companies and returns and future funding is dependent on this valuation and a realistic valuation. I think the large thing that these VCs are able to do is grant access to the international market. One, because they have experts that have built many companies. The analysis that I gave you in terms of what VCs look like applies here. Two, you have collaboration between companies within your portfolio because you now have an incentive to mutually lift up both of these companies. Third, portfolios are often interconnected within specific areas. For example, Sequoia Capital has many different investment groups. But fourthly, I think you have generally increased respect for Indian corporations. For example, the increased activity of Zomato in the United States of America. I think you get none of these benefits on opposition side of the house. I think we clearly win this debate at the point at which we mechanize all of the opening government claims, and we point out the inherent flaws in the opening opposition case. Yeah, I beg you to propose.
I thank the speaker for the fine speech. I would now like to invite the member of opposition.
I am audible.
Yep, perfectly.
All right, just give me 10 seconds.
I'm sorry, we can't hear you, or maybe it's just me.
I'm not speaking. Just give me 10 seconds. I'm not giving the speech, so I'll just give a countdown before I give it.
My bad, sorry.
No worries, no worries. A quick mic check again, if I'm audible.
Yep, you are.
Cool. PUI is through voice, preferably from opening government, anytime you want. So yeah, just say point PUI. I'll try to take you, if I don't take you just right out there impromptu, I'll try to take you around before I reach 6. So yeah. Opening government and their lack of proof by glorification is symmetric because their entire case contingent upon this premise when they're responding and building the preemptions against the bench that hey, glorification will happen regardless without proving as to why that is symmetric. We'll take that down. But secondly, opening option and the lack of any idea about the context of India, just economics jargon about that can apply to any country like USA, Sri Lanka, etc. And closing government and the lack of an extension. What is first extension? That note, this debate is about India, right? What do Indian founders actually want, and what do Indian startup founders and people who actually startups within India actually want? And that is the context of India that was missing in this debate that we need to government give within closing opposition. Before that, understand that there is a friction that exists within countries like India when you start a startup, right? Why? Because there's a government job fertilizer that exists all from that. That people and parents at all times say that, oh, you want a government job, right? You want ghar, ghoda, gaadi, etc. That idea of stability and that stable income is glorified to a great extent within countries like India when you're born as a child, and that conditioning is something that you get that, oh, that rhetoric, we know better than you, and that is why you should prioritize a job and you should go for a job over a startup. But secondly, this hyper competitive space for startups within countries like India, because regardless of whether you want or whether you get a VC funding or not, it will take a hard time for you to compete against multi-billion nifty firms like Coca-Cola, Pepsi, Flipkart, which are like niche markets within India, right? But thirdly, most importantly, there's a family narrative that operates within countries like India that you want to prioritize time to giving to families, right? You want to have joint families at all times of time, necessarily want to spend time with them, and that is seen as the goal for all Indian people, that you want to prioritize family and you want benefits of family at all time. That is why the goal for every Indian person within the very first place is something that is conditioned in the very place, that you want to live in a collective community rather than having an individualistic sentiment towards yourself. Rather than spending 100 hours a week at a startup, you should rather come back home at that time towards family is something that is always seen with the good term. But certainly if you prioritize time for a startup, it's something that is seen as with resentment at all times. That is why we believe that over here the entire idea of glorification is not symmetric, because these are the tipping points that within status quo within India, they're counteracting narratives to startups at all times. Necessarily when you have this rise of VC culture, that acts as a tipping point to oversee and supersede these particular narratives that already exist. So in the absence of these particular narratives, we believe that this glorification will not exist on our world. On that note, the fundamental goal and the end goal of people who actually start startups even after these counteracting forces on our world within India is not money. Because if you're, let's say, counteracting all of these ideas of stability, family, and hyper competitiveness, necessarily you're not good. Your goal is not money, right? Because necessarily you're foregoing your particular idea of a stable job at all. That is why the immediate return of investment or profits is not a goal as an Indian startup founder, because you're already superseding these ideas of stability in the very place. But rather your goal is to sustain in the market, to play the long-term game, to make sure your product is coming out in the market the way you really want it. Secondly, to exercise your autonomy and skills to the degree that you ensure you want. But secondly, a unique selling point of a product is something that is coming out in the most unique form, so that you can invest more in marketing, advertising, and the priority is to ensure that a USP is out there, right? That is why the fundamental priority is not profit, because necessarily you're superseding these ideas of stability and family at all times. Necessarily you want a long-term game, because you necessarily realize that this is a hypercom space. So people who actually started in status quo within India are the people who are actually serious about this particular thing, because not necessarily people who actually their fundamental priority is to play the long-term game without having this thirst for immediate profit at all times. Necessarily, people realize the utility of a product is a priority. So things like OYO and Ola are the ones who actually play the long-term game by making people realize the utility of their particular thing. At that point, that is the priority of an Indian startup owner, the long-term game. But before that, opening government, do you have anything for me?
Yeah, for the harms that you propose about startups to be mitigated on your side, you have to concede that the majority of workers who go to large traditional corporations, we explained how that's more coercive. How do you engage?
I'll be more charitable on our own opening. Our opening comes up and says that, oh, these VCs will just use like people's pension funds, etc. And the startup value is not evaluated fairly. These VC firms just artificially inflate values, etc. Let's be very charitable, right? They use fair money. They don't use black money. And they do not do prematurely IPOs. Why do these VCs are still bad for the startups within the context of India? Understand that these VCs operate with the incentive to maximize profit for these particular firms. Why? Because they want to control the firm and the practices. They want autonomy over the entire firm. They want to control the production and the product design, the revenue model in such a way. That's why they ask for stake, which is given in the context very clearly. That's why they want 51% equity in a firm, because that is how they can actually hold leverage of a firm, so that when they really want to sell off a firm for profit, they can get that. And that is why they ensure that they want to prioritize that profit, immediate profit at concern, regardless of whether it comes from market, regardless of whether it comes by selling of a firm. At that point, when necessarily they really don't want to lose control, therefore we believe that adding anything to get that control is something that these VCs are fundamentally prioritizing. But secondly, the maximizing profit in minimum time is something that these VCs crucially want. That is why they want to show their portfolio successful, that is how they can actually show that, because necessarily that is how they can actually show that, oh, our portfolio is so successful because the companies that we actually invest in are so profitable. Except that money comes from selling of these particular firms that is directly contradictory to the interest of these long-term interests or the startup owners, Indian startup owners, very fearless. That is this immediate profit is something that the VC act priorities. That is why the companies you funded become successful. They're so short-termist by all of that nature. That's why your company is just an object for these VCs in the very place. That is why this is crucially bad, because not necessarily when these VCs are rising within status quo government world, you necessarily are portraying more lucrative options to people. Oh, we'll give you contacts, we'll give you network, etc. But except if you do not agree to these particular options, if you do not agree to giving them leverage, they will ensure the firm does not get funded by anyone else. Because necessarily they understand that regardless of how many VCs are out there, there are also going to be lesser VCs compared to the number of startups. At that point, they have an incentive to ensure that if they are not funding a particular company, that your company does not go into their anti-portfolio. That means that if your company is not funded by them, that company still becomes successful, something that they do not want, because they do not want to show to the public that, oh, we did not invest in this particular company, it still got successful. At that point, they want to ensure that the company does not get successful if they do not invest, because by ensuring their particular networks and lobbies that they have within the entire VC circle, they can ensure all of that. But secondly, more importantly, your goals are fundamentally against and diametrically opposite to the goal of an Indian founder as compared to Indian VC. At that time, the information that the entire public get is something that's crucially bad, because ensure that this is not exploitation as compared to opening options analysis. It's something that's a problem solution mismatch and conflict of interest between these particular people. Why this impact is crucial to opening options? Because A, the gravity of impact that it has on people, but secondly, the sense of loss to the most proximate actor, who is the startup owner, and the most responsible is something that's losing the dignity of this value of work is reducing to a great extent. But secondly, more importantly, as to how people make more bad choices within status quo with this particular narrative. Not necessarily an average youth between the age of 20 to 25 who's not as interested in startup has one question: where will this money come from? Where will this funding come from? When necessarily this VC culture rises, people get an answer: oh, VCs will give you all of that funding, and that glamorous startup acts as a counteracting narrative to all of these counteracting narratives that we already analyze. At that time, when people think that, oh, startup is an easy game and that's how you can easily get money from VCs, more and more people, let's say, opt in this particular thing. Why is it crucially bad? Because note that honestly, that is not as easy as it seems. Necessarily, it makes the startup seem more easier. At that point, when people actually invest these particular time within the formative years to this particular thing, at that point, people necessarily lose out these formative years. When necessarily startups actually fail within status quo tomorrow, necessarily people see that, oh, the entire market is so competitive, and that is why they have lesser fulfillment, because necessarily they're taking out time for their family, they're taking out time from, let's say, this hyper competitive space. That is why they lose the support structure within status quo. At that time, this glorification on side government leads to this loss of time, loss of this top support structure to the most proximate actor, who's the Indian founder at all. Necessarily, that is why we prove two things to you: that how necessarily the interest of VC and Indian founder diametrically opposite, but secondly, that loss of time leads to let's say, bad choices within by virtue of the glorification that exists on government bench as a whole. By all of these two extensions, very proud to oppose.
I thank the member for the fine speech. I would now like to invite the government whip to conclude the case beside that.
Can you hear me properly?
Yep.
Okay, just give me a few seconds to set up my own timer. And the PY is in the chat only. I'll be taking it after 5 minutes mark, most probably from opening up. Okay. Okay, I'll be starting my speech in 3, 2, and 1. Problem with opening opposition is that they just went on with economic jargon without literally understanding what context we're debating in, and why it literally what kind of harm India has been suffering from for the rise of the VCs, but secondarily what kind of betterment it is they are going to do in the Indian context in the first place, which is thank you to CEO for pointing it out to fuck them over. But most importantly, closing opposition is literally confusing, because they just literally went on with a case that is that doesn't really mechanize to a point that these VCs are the ones who are getting a really good share of whatever the startup are doing. But even if it is getting the share because they have a stake in it, and the startup entrepreneur themselves have agreed to it. So on that note, I think there is a negotiation table that is literally on negotiation table to figure out how it will work out. It's not that, yeah, I'm just going to give you a lot of portion of my company and you're just giving me money. No, that's not some kind of Chinese debt trap policy bullshit. So on that note, what closing government have proved you is that startups exist on both sides of the house, because on the opposition side you have worse form of investment, because a, you have limited government bonds that are often backed to something else. Secondly, these government institutions often operate on giving of loans. VC funding is on a grant basis, and therefore you don't have to expend capital on paying back loans, which means that the government bonds that you the and IPOs bonds that the opposition is trying to portray is much more worse, because these kind of bonds can plunge into inflation if the government it cannot really give them back their loans, which is also known as public debt, and a lot of countries are suffering from it. And point to note that these are developing nations themselves. India is not really a developed nation; it is also a developing nation, which is will be far more worse on the opening opposition sides scenario. So what changes then? Is a leverage shifts, because you have increased awareness of the activity of VCs. We give mechanisms to OG to and OG's claim by giving you two mechanisms. Firstly, why regulatory laws in India, especially after corporate scams, have shifted. My partner have already given examples, but also it literally portrays the fact that Indian government is not really a lackadaisical and complacent one. That yeah, whatever they're just letting VCs do whatever the fuck they want to do. But secondarily, the legal regime towards the larger publication of data is literally visible, because of the fact that people are being a lot more scrutinizing, and the startup companies and the VCs who will stake their share in that company will incur losses. Secondly, unicorns often reach their valuation throughout IPOs, where when you have an IPO, you have publicly listed, and this information is a public. OG asserts that you have more information, but we give you the proper analysis to how exactly this pans out. Secondly, why startups are much more better on our side, because of the fact that the max to access because of the fact that there are because the make access to international market, because of the fact that you need to increase the attraction towards the international investors, so that your company is profiled as a profiled as a literal profiled as a literal profiled as a literal good company. But secondarily, there's an incentive to collaborate collaborate within portfolios. Often these firms have different practice groups that invest in many different areas. When you have investment in many different areas, you're able to build your market trees that work on each other. Impacts regarding it: a, greater respect for Indian companies abroad, because of the fact that you are gaining more attraction from international spheres of investments. Secondarily, significantly more funding for startups, which means that your startup company, which have a lot of potential ideas that can be panned out, can have a lot more opportunities to expand further and develop much more further. But thirdly, is less likely to fail, because of the fact that you have a lot more fundings, and which is absent on the opposition's side. So on that note, why opening opposition is bad and why do we fix this? Because of the fact that opening opposition literally asserts that the 75% are bound to fail, but don't really give a mechanism to how exactly VCs and startups should work if they can't really take any kind of risk. But second, so we should be just stop it. But secondarily, they are much more worse, because they got the financial government financial institution and colluded with VCs funding, which is getting money from pension funds, which is literally a hoax and lie. That's the reason why opening opposition is out of this debate. But thirdly, they're talking about minorities and women are discounted. No, these VCs will obviously fund in your company if you fund in your company if your idea is lucrative enough, not based on your race or gender or something like that. Before I move on, go on.
If the company is profitable, VCs pressure to keep it private so they can get more profit. If the company might fail, they pressure to IPO early so they can earn a quick buck while the stock is still overvaluated. Why are VCs a good thing?
VC, it does really exist on both sides of the house, and your side is much more worse because you don't have a no bargaining chip, but B, you don't really have any good options of choosing which which VCs that you need to go for, but rather you are dependent on them. But CO is much more worse because of the fact that their extension is much more problematic because they are literally going with the mechanism of the opening opposition, but the fundamental thing is that the family system is much more broke and a counter narrative exists, but I don't really know why exactly it will be able to outweigh the benefits that we get from it. But B, the fact that a prioritization of immediate profit with minimum time is literally any kind of business stakeholders would want, but it doesn't really mean that there is no negotiation table, that they cannot really negotiate a certain amount of autonomy over the company. But the privatization of company literally remains because of the fact that they are and because of the fact that so that the government cannot politically intervene in their policies, so that to fuck them over, just like China does it in their country, which is the reason why there are so many backlash of Chinese company in the West world. And that's the reason why these companies need to have and some kind of independentness, which is literally present in our side of the house, as opposed to the whole opposition side. So for all those reasons, proud to propose.
I thank the speaker for the fine speech. I would now like to invite the opposition rep to conclude this debate.
Am I audible?
Yep.
Just a second. I'm switching over to Wi-Fi. Yep, I'm done. Mic check. Can you hear me?
Yes, you're audible.
On the motion, this House supports the rise of VCs in India. Starting in 3, 2, 1. Panel, there's a very simple reason why this is going to be an upsweep, and that is that Cuff fails to engage with the true comparative at any given point of time. Let me tell you what the true comparative is right off the offset. OG and CG both lie in independent yet funny ways. Both of them say that in either world, startup culture is going to be rampant. We tell you, and Ashutosh specifically points out the mechanisms why the counterfactual means significantly lesser startups, or startup culture not being as rampant. The motion slide literally says that VC culture was the tipping point. But more importantly, panel, there are two reasons. A, we think there is a very strong countervailing force of providing for your family at any given point of time. Where does this come from? This is a function of religiosity and how much we respect our religions at any given point of time. There is idol worship and whatnot at any given point of time. So this has been embedded and ingrained in our minds that you should listen to family. You ought to return the obligation that they have fulfilled by raising you in a good manner. Yada, yada, yada. Secondly, we think we are in a hyper-competitive East Asian market. That means to reach safety is what everyone understands as their proximate goal. That is why there's a hype of government jobs in India, even though they provide lesser perks as compared to the private sector, simply for the reason of job security. That means the counterfactual is less startups, unless the tipping point then becomes that VC culture comes into India. And I think OG asserts that this is symmetric by saying that, oh, like media has glamorized things like that. I think if the media glamorizes Jeff Bezos and Elon Musk, I think your father telling you something is more proximate to you, and the number of times that you hear that is something that's going to be more proximate and something that you're going to align with more. But secondly, what are CG's assertions? CG just says that the job market means that logically this is the next step. I'm just going to counter assert two things. A, the norms are so strong that no, you will look for jobs regardless. But secondly, panel, we think there is rampant investment in India because people are moving out their manufacturing hubs from China to Vietnam and India. That means there's a rampant influx influx of FDI at any given point of time, that means corporate jobs are getting better and better and more and more. That means I still don't see any reason why the comparative is what they defend. At the end of the response, what are we able to prove you? We are able to tell you what the true comparative is. That means one of the ways through which they were trying to win that, oh, if it happens either way, might as well help them falls off. What is the second thing I'm going to tell you? That even if this is symmetric, why are they not going to succeed? We think that there are two reasons that these people are not going to succeed. There are there are economic reasons that OO gave, but two other reasons. A, we think CG's own concession that collateral will not now be a necessity is something that plays into our case, because that means the access to these things becomes far better. That means the number of people taking these loans are far better. But secondly, the age of the startup at which you provide funding also becomes very nascent, because earlier you had only startups like VCs funding at conventions and whatnot. Now, since access is easier, you get that funding way quicker. But more importantly, a lot of people are just jumping into this uninformed with the end consequences. Why is that? That is because the way in which VC culture has manifested in India, a la Shark Tank and all those kinds of things. That means people are bound to make bad decisions. But let's assume that their framing is correct. This is a symmetric narrative. Let's assume that people succeed. Why then is it still bad? And here is where Ashutosh wins the debate for us. Two things, panel. The number of people succeeding, there is an equal number of people failing at any given point of time. There is a very limited market, so I can't have Ola, Uber, Rapido, all of them. I have to operate on one of those. Consumer base is a zero-sum game. That means at any given point of time, there are bound to be failures if there's an equal number of successes. What does that mean? There are two very important things that you trade off on. There is time and there is the virtue of family. Panel, we think family is especially important considering that there is a support structure that you have had since very early. Presumably you would have had to fight a lot or make a lot of compromises in order to get them on board, or even worst case, you would have had to detach yourselves, move to a new place. That means at any given point of time, the risk is too huge. The pressure of succeeding is immense at any given point of time. We say the process of funding itself is bad. Even if the end outcome is good, you are going to just fuck yourself over to death. But secondly, panel, we think just this echoing of stability or things like that, we think what this means is what Ashutosh told you, that VC interests don't ally with founder interests. VC interests are product differentiation, market design. Founder interests are just stabilizing a more certain market base because we want stability at any given point of time as Indians. That means we think this is a constant problem solution mismatch at every point of the way. That means even if they are able to succeed some people, we think people losing out on time and people losing out on their support structures is the biggest benefit because of two reasons. A, it is more certain. Time is definitely going to be invested nevertheless. You are going to have problems of friction with interpersonal relationships nevertheless, just because you're not able to devote enough time to them. We think on certainty, we are more certain than governments. But secondly, panel, the harms are irreversible or not. That means you have to live with the consequences no matter what. This is incredibly huge considering that profit or fulfillment, all those kinds of things, A, either have other avenues to be achieved, or B, are very short-termist in nature. Koji, do you have anything left?
Again, how is your counterfactual better for the quality of life of workers on the ground when the dominant force becomes traditional firms with rigid discriminatory corporate structures?
Yeah. There are two ways I mentioned that Gov tried to win this debate, right? The first way was saying that this narrative is symmetric, so might as well ride the wave. Now that I have disproved it, let's come to the second point. That this is good thing, that you need startups to succeed at any given point of time because there are good impacts, and this is the only way remaining that you can credit any government. CG is just reliant on OG's impacts. If OG's impacts falls, CG doesn't progress. Two things. First thing they say is minority startups. Note, minority startups literally mean you're exclusive in your idea and you're differentiated to a large degree. That funding exists regardless. We are not eliminating VCs from the face of this earth. Then the second benefit that they'll have left, labor rights. Panel, two things. A, the people who go into startups are people who are skilled tertiary workers at any given point of time. Startups don't install factories from the get-go. They literally have a set amount of number of people you can employ in order to be called a startup. But secondly, startups in India operate on wafer-thin margins because of the analysis that Ashutosh gave you, that you need to market yourselves constantly in order to capture the market at any given point of time. That means I don't really necessarily get the comparative of labor rights that you have been talking. But thirdly, media is never going to shine light on your side of the house, whereas against corporate structures, there is already a lot of activism whose wave you can ride. on government, the media is just painting the like flowery picture of how great things are going to be once the startup culture comes to it and natural end and things like that. That means the media attention that you want is already consolidated, and it's better used when you like just like use existing mechanisms and use the existing capital that you have to fight off these things. That means labor rights is an absolute wash, minorities are an absolute wash. Panel, what have we given you? We have given you the harms of time and family being traded off, even in the best case. We have told you why VC goals don't align with founder interests. And also, we have told you why we are the only side in to take the Indian context in this debate into factor. Very proud to oppose.
I thank the speaker for the fine speech, and I thank everybody for this wonderful debate. I would now request everyone but the judges to leave this call for us to then deliberate.
Thank you.
Good luck, everyone. Thank you.
Thank you.
OC members and Rohan, are you here to stay? Rohan, are you there?
Priyanshu, can you do it on Discord, because I think the recording is still on.
Right. Yep. Rohan is like also not responding, so let's go to room number 1, panel discussion on Discord.
I'm sorry, can someone from the OC just drop a link to the... Actually, no, I think I have it. No, sorry, never mind. I'll be there. Yeah.
We're doing it on Discord, right?
Yeah, room 1, panel discussion.
Cool.